Asia-Pacific markets extended gains from Monday as tech shares rebounded on Wall Street after a difficult session on Friday. Investors are also looking ahead toward flash business activity figures. Now, let's take a look at the Nikkei in Japan because it is up 0.55% after Japan's business activity expanded at its fastest pace in 8 months in April. The country's composite PMI index climbed to 52.6 from March's 51.7. That's its joint highest level since August. Meanwhile, the yen hit a fresh 34-year low against the US dollar early Tuesday, hitting 154.85 against the greenback. And Australia's business activity also expanded at its fastest clip in 24 months. That's as the country's composite purchasing managers index came in at 53.6 compared to 53.3 in March. Now, let's bring in Chief Market Analyst at Scope Markets, Josh Mahoney. He joins us now live from London. Josh, great to have you with us this morning. So we saw the PMI in Japan. That's actually positive news, but we've also seen Japan slipping into recession. How is the economy doing in Japan? What do you think is the outlook there?
Yeah, we've seen improved PMI data coming out of Japan. Certainly, big eyes focused on the manufacturing sector, 49.9. It means it's sort of teetering on the brink of moving into expansion. But for a wider picture of the economy, we have seen a fourth straight reading above that 50 mark for the composite number. That means that we have got expansion within the Japanese economy. Essentially, for the fourth quarter, we saw 0.1% growth for Japan. And really, this comes despite the fact that they have embarked on a continuous period of accommodative monetary policy at the Bank of Japan. Flies in the face of what we've seen around the rest of the world, where we've, of course, seen monetary tightening coming into play. And now, just as we're seeing other central banks talking about the possibility of cutting interest rates, the Bank of Japan are moving in the opposite direction, just recently moving out of negative rates and moving to 0%. The question mark here is whether they're going to continue to tighten and what negative impact that might have on the Japanese economy. So certainly in terms of the growth outlook for Japan this year ahead, the IMF have it around about 0.9% for growth for the year. So there is an expectation that we will have positive growth, but potentially being outstripped by some of the other Asian nations.
That's really interesting, Josh. And let's take a look at the yen as well, being particularly weak against the US dollar, hitting a fresh 34-year low. Why? And what does it mean for the economy there in Japan? Is it supporting the businesses in any way? I'm thinking of exports, for instance.
Yeah, exactly. Yeah. So essentially, with the Japanese yen being devalued to such an extent, this is positive for exporters in Japan. Of course, it doesn't necessarily look great, and it does increase the value of any of their foreign debt. But at the same time, it's positive in terms of exporting goods around the world, which makes it cheaper. It's a similar kind of story for tourists, where tourism numbers have been booming because of the cheap yen. And ultimately, this is something that has been beneficial. It raises the cost of goods coming into the country. And by and large, the Japanese have been happy to raise inflation after decades of disinflation and below target inflation. So by and large, I would say it's not necessarily a negative thing. It does have a lot of positive implications for the Japanese economy.
Thank you very much for your brilliant analysis, Josh Mahoney. Thank you.